there, grab your swimming suits because we are going for a deep dive. Hello Adrian and welcome back to my channel. It's 7:30 once again, 7:30 p.m. UTC plus 8, and welcome everybody who is watching me from wherever you are in this world. Hope you're having an amazing weekend and a lazy Sunday. Well, maybe lazy not for everybody, but well, it has been a very eventful Saturday, as you can see. I'm just being sarcastic. As you can see, we are going sideways. Yes, sideways. Amazing, isn't it? Hi Johnny, welcome. Yeah, so yeah, yesterday we have been talking about Bitcoin. If this was a BART pattern or a bull flag, and yeah, it seems like it just keeps going sideways, so we don't really have a resolution so far yet. I was hoping that when this stream would be starting, I would be able to tell you guys that look, it was a BART pattern, or look, it was a bull pattern. But yeah, right now we don't have resolution just yet. Maybe we will have a resolution later during the show. So let's start first with what is going on in this world with the COVID virus. Let's refresh and check out our numbers. Let's check it out here. So in the US, we are at 938,000 people. Italy starting to near very close to 200,000 right now. Let's check the chart. Where is the coronavirus chart? Right here. Let's refresh it to get the latest numbers. And we are here at 2.9 million, basically 2.9 million confirmed cases. It's starting to look like it's slowing down a little bit, the slope, but it's not flat just yet. The curve is not flat just yet. The US is starting to show signs of flattening. Yes, finally. Spain is still not good. Italy is still not good. France is starting to show some signs of flattening once again. And Germany actually is starting to show a small, tiny slope down. UK, still not good. Still not good. So I don't know how the situation is with everybody around the world. I hope everybody is doing well and safe at home, and yeah, enjoying the break from work for some, and for others, even if you're on a break, yeah, spend your time wisely and do something productive. That's what I would be saying. Okay, so let's go on first. Where should we start? Well, let's start with some economics. Thank you for liking the stream, Darren, and welcome to the channel. Let's go first to, oh, that's our BART pattern. Where was I? Boom, boom. Let's go, oh, here. Very big news. The FED, so as you know, the FED has been cutting rates to now 0%, which is the maximum that they could do. But now they are actually forcing, asking the FED, the senator has asked the FED to go negative. So basically, when a bank would be loaning money from the central bank, not only would it be free, the central bank would be paying the bank that is taking the loan some small fee. Like, so you are getting paid to take a loan. So the more money you are loaning, the more you will get paid for it. It will be cheaper when you get it, pay it back, when you get it back. And yeah, I don't want to explain. I mean, I hope you kind of feel where I'm going at. That is probably not a really good reaction, or that's probably not a really good idea, to be honest. So, but yeah, that is how desperate the FED is right now to, push the economy up towards back into a normal state. But yeah, so they are asking the U.S. Federal Reserve to be fighting the recession by taking the interest rates below zero for the very first time. because, well, in the absence of the COVID-19 vaccine, the malaise will likely persist well into 2021. Like I've explained, I don't think this case, this situation is going to be, super bad right now. But I think whatever things are going to go, whatever bad things is going to go happen is most likely going to be next year in 2021. So, as you can see here, any Economics 101 students knows that in such dire situation, the central bank should cut interest rates to stimulate growth and job creation. So yeah, that's what they are planning to do. But why do you why the fear of negative rates? Well, a decade ago, the answer would have been that it was impossible to go below zero, because banks would simply avoid the charges by withdrawing their reserve deposits and holding the funds in paper currency, which pays zero interests. But economists now recognize that that doesn't happen because it's costly to store billions or trillions of dollars of paper currency safely. So several European central banks, as well as the Bank of Japan, have successfully taken interest rates below zero. So basically, the US wants to be doing the same thing as some of the other central banks where the interest rate is already below zero. So yeah. But yeah, like I said, this if they are going to go below zero, it's that doesn't look good, guys. So yeah, yeah. Anyways, what we can look on is, when is this going to happen? Well, we have a countdown. We watch the CME FED watch tool that you can check, and you can see the countdown over here. I'll zoom it in a little bit. In 3 days and 6 hours, the countdown for the next meeting. And as you can see right now, the target rate right now is zero, and what they want to do is basically a proposal where they are going below zero. So if it goes below zero, once again we'll get a push once again, trying to give a catalyst to this market and trying to save whatever that is still savable, because they are really, like I've shown the chart yesterday, the amount of assets that the FED is buying right now in the world, $41 billion on a daily basis that they are buying. So yeah, crazy times. And still the everything, the market is going up, of course, but how long can they keep doing this? It's not something that is maintainable. And like I said, I don't think that we will feel what is the consequences of all this year, but I think next year we will feel the consequences for sure. But yeah, let's see what happens. They are very they think that we will have the similar thing that happened in 2016, where we get a V-shaped correction. But yeah, I have my doubts, of course. That's what I've been saying for a long time already. And what is new, not only in the US but in the EU and Europe, they are also readying a €1 trillion fund for pandemic relief. And as you know, they already actually have a relief plan, which was, I think, $1.2 trillion. It's also in this article. Let me check quickly. No, so €500 billion relief was approved earlier in April, and basically they want to add more through to this relief fund. So another €1 trillion to basically save, and same thing as what the US is doing, saving. Here. So according to the European Commission, Ursula von der Leyen, 1.8 trillion euros have already been spent. So 1.8 trillion was already spent, and they want to add another 1 trillion euros on top of that. 2.8 trillion for Europe, apparently. Well, still not 7.2 trillion like the US, I guess. So maybe we'll get there. But as you can see, the amount of effort that all the governments, all the central banks, all the money printing and relief funds that are being pushed out, lending, trying to push, cutting the rates, trying to push people to be spending money, and trying to make sure that we don't get deflation has been really, really insane. And still, as you can see, what happened to oil crashed down, so it's not helping. And I think if they were a little bit logical, they can understand why, because everybody is in lockdown. Like I said, people are just not spending money. Nobody is thinking about like, okay, well, let's spend some money and buy something nice. No, everybody is just thinking like, okay, let's stay home, don't not spend money, save money because, well, this is a bad time. Maybe it will stay very, very bad. So the fear is in everybody already. So what happens when people are in fear? Of course, instead of spending money, they will be saving money. I mean, it's just a normal psychological reaction. And you can say all that you want in the media, like, oh, things are going to be fine, things are going to be good, things are, be normal again very, very soon. Well, it's not going to help if people don't believe you, or if people are already in a state of fear, right? So as long as we don't find a cure, as long as we don't have a vaccine, as long as we don't see anything that shows like, okay, this is really, really okay, this is going to be really good, then yeah, the fear is in everybody's person and their mind. And thank you, Henry, for liking the stream, and welcome to the channel. Yeah, everybody is scared. And when you're scared, you're just going to be saving money and not spending money. It's just normal psychology. Thank you for liking this stream, Sean, and welcome to the channel. So as you can see, a lot of things are happening, and even more things are most likely going to happen. So in 3 days, we have that FED meeting. If we are going to go, if the FED is going to cut lending rates below 0, that's going to be insane. Hi, thank you for liking, Zaldi, and welcome to the channel. So yeah, that's going to be really, really insane. I'm really, really curious like I said, what the consequences of all this is if the plan fails. But if everything goes fine, then it was a good move, right? Thank you for liking the stream, Nikolai, and welcome to the channel. So yeah, let's see how things fare. For me, of course, this is all media, and yeah, although I do read it on a daily basis, I do take note of it, but it has nothing to do with my trading. So I only trade pure technicals. What the charts are telling me, that is basically what I am trading. I don't really care what is happening in the world, and neither should you if you are interested in trading, because like I said, the economy, the correlation between the economy and what happens on the stock market is less than 3% or something like that. We've given the article, I think was it yesterday or the day before, one of my previous videos, that showed that there's very little correlation between the stock market and the economy. And yeah, that's basically, the stock market is just basically a commodity, and it's just trading on itself, right? So people are still amazed that the S&P or the stock market is rising, or Bitcoin is rising, and everything is rising in price, while the economy is on a lockdown. And a lot of people don't understand that logic just yet, but it is what it is. It's not correlated. But of course, there will be some long-term effects on the market. Like I said, I consider the economy like a lagging indicator on the stock market. So when things go bad for a really long time, we will only see that effect most likely months and months later on in the stock market. So let's move on the next subject. And the next subject is, of course, gold. I've been telling you guys, I'm quite bullish on gold, and not that because I'm a fan of gold. I'm far from a fan of gold, but yeah, gold has been the hedge. If you look at the charts, it was very simple. Stock markets went down, and the gold price went up. That's what a hedge is all about, right? Like, you are finding a product that is doing the opposite thing of what is the general consensus of the general movement or the general trend of the market. And yeah, while as you can see in this article, demand for gold soars and suppliers struggle to keep up. So sales of minted gold bars have spiked to the highest level since 2013. However, suppliers have been struggling to provide amid the surge of demand. And like I've also explained many times, you have to be very careful when you are interested in buying gold, because most of the gold that you are be able to buy will be IOUs or paper gold, like I call them. That means, like, for example, you go to a bank and you said, hey, I want to buy 1 bar of gold. You will get a paper from the bank that tells you, look, this is an IOU, a bar of gold, and we'll put it in a safe for you. And that's what paper gold is. But the problem is, and this is what happened in Holland very recently by the ING bank, they forced all the people who had paper gold to liquidate their gold. So basically, if you owned gold, paper gold, you thought that you would become rich in a couple of years because you see gold going up in price. So you were like thinking, yes, I'm going to be cashing in now, you know, in a couple of years, my gold is going to be double of value or something like that. Well, they forced everybody who held paper gold in their bank to sell it. And they sold it, and if you don't want to sell it, they will be selling it for you at market price. That's basically it. So either you could sell your gold to the bank, or the bank would force you to liquidate your gold at the market price. That's how crazy it is, right? The reason for that is, of course, well, there's 2 reasons. Either they could not supply the gold. That could be one reason, right? It's not a very good reason from the bank, of course. But the second reason could be something more malicious, that they wanted to hold the gold themselves. You know, there's so much greed in this world, right? So the bank could have just said, like, wow, gold is a pretty attractive price right here. If we just liquidate all our customers' gold and keep all the gold for ourselves, finally, and you know, during this bad period, this COVID virus, we're not going to make a lot of money. You know, let's keep all of this gold. So what you've been seeing is also in a lot of countries, I can show you maybe on another stream the charts of a couple of the countries, the reserves, the national gold reserves of like Russia, of like China, of like big countries are increasing in gold as well. So that makes you kind of think, right? Like, suddenly all these big countries are starting to buy gold and stock gold. Suddenly banks are forcing you to liquidate your gold. And that's really a horrible thing, right? You were thinking you're investing and trusting that bank in gold, and then they force you to they just take it away from you, and you have nothing to say. You can't say anything. You can't, you know, sue them. You can't do anything at all. And I think that's a horrible feeling. And that's one of the reasons why I am such, of course, a proponent or a fan of Bitcoin, because 12 words, and you can, if you are you have a good memory, you can just keep those 12 words in your mind, and that's your Bitcoin storage. Nobody can take it away from you. Nobody. Like, they can't touch it. Like, let's say they tell you like, no, you have to liquidate this Bitcoin at this point, at this time, right now, and we're taking it away, the government. They can't, because they need to know the 12 words, right? So if you're interested in buying gold, make sure that you are buying physical gold, right? So make sure that you're buying physical. But I'm gonna tell you right now, there's a lot of fake and there's a lot of scams. So make sure that you are, you know, that you are buying from a very trustworthy site or partner that you know, that has the correct gold licenses and so on. Because there's a lot of scamming ongoing, because there is so much demand for physical gold right now. And as you can see here, yeah, even the largest gold refinery is ramping up their production, and they can still not supply sufficiently. So even if they are, as you can see, even if they are for every coin we make, be it gold or silver, we could probably still sell 5 or 6 of them. That's basically what is going on right now. So whatever they are producing, 5 or 6 times that amount is being demanded. And like I said, not now, but in the future. Let's say if gold becomes like 2000 or something like that, something really crazy. Let's go quickly at the gold chart because we're talking about gold right now, right? So we are at 1,727 right now. I'll put this on the monthly chart because the monthly chart is really pretty, as you can see. It's so pretty. This monthly candle, look at this monthly candle. It's an amazing candle. And as you can see, if we look at our previous resistance line, 1800, and then we can see here 1900. I'm pretty confident that that will be going to that levels and over the next couple of months when things are still like this, of course. And then we are in unknown territory, right? Because that would be the highest gold prices, I think, that we have seen ever. Yes. So once we break 1800, 2000, yeah, that's it. That'll be the highest gold price, and then, you know, who knows. But I think once we start breaking this all-time high here at like 1930, what I think will happen is a lot of people who have paper gold will be asking like, hey, I want to exchange my paper gold into real gold, or I want to, you know, physically have that gold in my hands, or where I will put it in my safe. And that's when the issues are going to be arriving, because I'm pretty sure there has been too much paper gold being sold as IOUs. That is what happens as well, right? And that's how we got our bank crash. People were lending out money while having the money that is supposed to be in the bank, and then when people started to ask, hey, where is my money, and it's only a number on their account, but they cannot get the actual money, that's why, you know, a lot of banks crashed. So imagine if you have a bank run and people are starting to ask, okay, give me my gold. Yeah, there's gonna be a lot of issues, right? But it's not gonna happen now, because now we're just in a demand phase, right? People will just try to get the gold right now. So I'm just saying, most likely once we start hitting these all-time high prices, when gold is really high priced, I think a lot of people will be wanting to switch or exchange their paper gold into real gold, and that's when we will have a lot of problem with gold. And that is something that a lot of people love about Bitcoin. Once again, Bitcoin, you know, it's there's no, you know, there's no duplicate. You can't hack it. Well, thus far it's been existing over 10 years and it has never been hacked. You cannot duplicate it. You know, it's like the perfect version of gold, to be honest. It's very similar, and that's why people are calling Bitcoin the digital gold, or the Bitcoin or the gold 2.0, because it's has the same function as gold. However, it is digital and it's online. That's basically the only difference between gold and Bitcoin. And as long as those fundamental stay, then it will have a value in the market, right? So yeah, once again, gold is something that I am interested in, and I think that will be the first things. Well, will this cause the crypto downturn? Well, the thing is, right now the crypto market is very correlated with the stock market. So if the stock market, thank you for following me, Sunday, and welcome to the channel. So the correlation between the stock market and the crypto market is very correlated. So as long as we don't decouple from the stock market, then when the stock market goes down, then the crypto market will also go down. The only hedge that we have seen so far in the market are just a couple of things. Among those things is gold. So when the stock market crashed down, I don't know what it was, 36%, gold didn't crash down 36%. That's what a hedge is. Same for the USD. The US dollar, although they have been printing a crazy amount of US dollar, the US dollar, the Dixie, the dollar index, has not gone down, which means that it is still holding the value and is doing something different than the stock market. So as long as the crypto market doesn't decouple, doesn't become a hedge, doesn't decouple from the stock market, then it will affect the downturn as well. So if I'm expecting the stock market to go down, then it also means that I also expect the crypto market to go down. But that doesn't mean that it's going to be correlated forever, right? When it turns and it becomes a hedge, then it will decouple, and then it will do the opposite thing than what is happening in the stock market. But I don't believe that we are going to be decoupling anytime soon right now. The reasons for that is, like I said, a lot of people are not ready for the crypto market just yet. Secondly, we need to have inflation or hyperinflation before we are going to be decoupling from our cash or our fiat system. And I don't think that the hyperinflation phase is going to happen just yet. I think we will still go through a deflationary phase first, for a couple of years most likely, and then after deflationary phase we will go into a inflationary phase, and then afterwards into an hyperinflationary phase. And I truly think that once we get to that point, and I'm talking about like 5 to 10 years cycle here from here, so once we get to that point, I think crypto market is going to be invaluable and most likely be replacing everything. That's what I think will happen eventually. But will it happen now, like today, tomorrow? Some people say next week, some people say next year. No, I don't think that will happen. I don't think that's realistic as well. People who are in power, who are in control, will do everything they can to keep their power, right? They are now in power. They will try to stay in power, and that's just how the world works. And that's why you are seeing that the governments are printing money, pushing the people to be spending money, pushing the people to be loaning money from and investing money. Because that's the only way that the economy can run, right? If everybody would just be holding and not doing anything, there would be zero spending, and that would mean that the economy would just be crashing. That's what's happening right now, right? That's why we have a depression and a deflationary economy right now, because nobody is spending right now, and that is basically what is causing this issue. Okay, so let's go back to Bitcoin. This article is from so basically, I don't know if you know Ross Ulbricht. Ross Ulbricht is basically the founder from Silk Road. Silk Road was one of the first online sites where you could use Bitcoin to pay for stuff. It was not very let's say positive. Hi Javen, thank you for liking the stream. It was not very positive usage of the cryptocurrency. It was like a dark net type of thing, where so you could buy like hacker services, you could buy like drugs. A lot of drugs were sold on the Silk Road, so a lot of bad things were sold. So he is he said for him, obviously he wanted to have a decentralized market, and whoever wanted to sell something should be able to sell, whoever wanted to buy something should be able to buy, and he was using crypto or Bitcoin in that case to power that website. And of course a lot of bad things happened, and then the government stepped in and they they broke down and stopped the website, the Silk Road, and also they put him into jail. So yeah, until today he is still in jail, but he is still doing Bitcoin analysis in jail, and on a it looks like he's doing it on a paper napkin. But yes, what he said is that he is predicting that Bitcoin is currently in a wave 2, and we are most likely gonna go between 2,800 to 1,200 first before we are going to the moon to 333 million. So basically that is what he is saying, and we are just in our second wave right now. But yeah, he's just doing basically simple Elliott wave theory. I've studied Elliott wave theory for a long time as well. I was a very big fan of the Elliott wave theory at the start, and I still am, and I still use it to, you know, for my technical analysis, but only more to see the patterns a little bit more, not really for trading, because the problem with Elliott wave theory, I don't think you can be a profitable trader based on just Elliott wave theory. But yeah, that's just, once again, that's just my own personal opinion. A lot of Elliott wave theory traders will be hating me for saying that, but that's just, once again, my own personal opinion, because like I said, everybody has their own way of trading, and as long as you make money, as long as you are consistent and your P&L is positive, you are doing the right thing. So there's nothing I can say about that. I'm just saying this personally for myself. I do like the Elliott wave theory, but I think it is very hard to be trading upon that, and I think there's a lot of better tools to be using as a trader. But for a technical analyst, just for analyzing prices and situations, I do think that Elliott wave is a cool tool to be analyzing things. So let's go into our main topic of today. So we'll probably go in depth later on afterwards about technical analysis on Bitcoin, but I wanted today to go a little bit deeper on-chain analysis on Bitcoin, because I do think that it has a value as well to be checking out on-chain analysis aside from technical analysis, to give you a better view of what is going on in the crypto market. So let's go into some on-chain analysis. One of the tools that I'm using is Glassnode. You can get a free account. Just go to the Glassnode website and you can get a full free account yourself. And what it basically does is it keeps track of a lot of data, like what is going on the central ledger of Bitcoin. For example, how many wallets are there, how many transfers are there, how many addresses that has big balances, how many addresses has low balances, what are the exchanges doing, how many transactions, everything that is happening on the blockchain, basically. That's why it's called on-chain analysis, right? So anyways, let's go quickly over a couple of things that stand out on the on-chain analysis. So first of all, let's look at the new addresses. So if we can see that the amount of newly created addresses has been slow and steadily going up, but it's still not there yet. As you can see, we were at the peak here when we were at our top of our bull market at the $20,000. Everybody wanted to create a Bitcoin address or a Bitcoin wallet, of course, because that was the hype. And as you can see afterwards, we are still stable, but it's not really, you know, super hyped. But it has been increasing lately. That is true. That is the case. So that means adoption is there, but it's not really, you know, what you want to be seeing is, of course, we are now past over the 10 years already. And the technology, we want to see mass adoption, right? So we're not there yet, not at the mass adoption yet. And that's also one of the reasons why I am still holding off on the fact that, you know, Bitcoin is going to go to 100,000, right? Well, we still need mass adoption before we get to those kind of amounts. Will it happen? I do think it will happen eventually, but this can take, of course, like a pretty long time. Like I said, it could easily take, for me, it could easily take 5 years or something like that, right? So let's go, the new amount of addresses. This is the total amount of addresses. The total amount of addresses has been piling up on a very fast rate. So that is something that is very positive. We kept creating more and more addresses and wallets as well. So let's check out the active addresses. the amount of active addresses has been similar to the amount of new addresses. It's not bad, it's not that great. It has been increasing lately, it has been very active, but it's not, you know, like I said, we're not at that phase where we're seeing like, you know, mass adoption just yet as well. So let's take a look at this. The addresses with balances over 0.01 BTC on the wallet. As you can see, the amount of wallets since 2018 we had a drop, but then since 2018 until now, until 2020, we actually had a very strong increase of wallets that have more than 0.01 US dollar value of Bitcoin on the wallet, right? So we have that means, because little amounts, I look at it as retail investors, right, or retail people, the normal common people, because they only have a small amount of Bitcoin on their wallet, and that's very positive for me. So for this on-chain analysis, we can clearly see the last 2 years adoption has been definitely increasing in perspective of the retail investors. So retail people have been more and more in touch with Bitcoin, right? So then let's look at addresses that have over 100 Bitcoins, right? So 100 Bitcoins, those are more medium investors. Let's put it like that. Medium investors to small whales. Yeah, let's put it like that. And what happened is, we can see that after the peak in 2018, a lot of people who have more than 100 Bitcoins started selling. So that is obviously not that great, right? So medium investors or medium smaller whales have been selling after the drop, after we've hit the top in 2018, as you can see. And as you can see also right now, the last couple of days, so if we zoom in a little bit, let's zoom in here a little bit. So as you can see here, when the price currently the price went up to 7.5k, we're at 7.5 or 7.6 right now. The thing is, what interests me is, like, as you can see, the number of wallets that have over 100 Bitcoins dropped down. That means that they have been selling, right? So during the price, even though the price went up, the people were selling. So that is something very, very interesting for me that I'm taking notice. So let's go on and let's go to the balances that have over 10,000 Bitcoins. Okay, let's reset this one first and zoom out. How do we, 1 second, oh shit, let's just refresh here. Okay, why is it like that? Hey, okay, so sorry. So for the wallets that have over 10,000 Bitcoins, and as you can see right here, during the price moved down, up, down, up, down. It doesn't matter. The amount of people that were holding that wallets that have over 10,000 Bitcoins pretty much stayed the same. That means that the hardcore supporters of Bitcoin never cared. So they bought here, as you can see, since the start, and they just held on. The only time that they sold quite a substantial amount was here in 2000, at the 2000, just before 2019, when we had that major drop. So when we had that major drop, some whales did panic. Some whales did panic and dumped quite a lot as well. But let's zoom in the past couple of days. Not days, the past couple of months, let's put it like that. Something very interesting to see is, so when the price currently went down to that really small, that bottom that we had, like you know, the 4K or something like that, we can see that there were wallets of more than 10,000 Bitcoins that increased. So that's really interesting as well. So how do I analyze this data? It means that retail got more interest and bought more over the last couple of years. So there's more exposure to retail. Smaller whales or investors, medium investors, they are more concerned, and they are getting rid of their Bitcoin around, you know, this kind of phase. They are concerned. Big whales, they've always held on, and actually whenever the price drops hardcore, like, you know, with our major crash, they actually buy in a lot. So what does that tell me? That tells me that most likely we have a very good future for Bitcoin, because these guys, the whales that have over 10,000 Bitcoins, they want more Bitcoin, and they don't care. They just leave it there, and they just hold, and they just buy it. Hi, Jair. Thank you for following, and welcome to the show. So they are basically holding, and that gives me a very positive, outlook for Bitcoin, because these guys have been in it since the start of Bitcoin. They bought Bitcoin since it was $10 or something like that, right? Or $100, and yeah, they kept on holding on. And whenever price goes down into a major crash, they just say, okay, it's time to buy 10,000 Bitcoins here, right? And they just hold it and keep it strong. But medium term, because the medium guys are selling, that does give me some information that maybe the bottom, medium term, the bottom is not in just yet, right? And so the traders, the medium whales, the smaller whales, those are the guys that have like around 100 Bitcoin or over 100 Bitcoin, but below 1,000 Bitcoins. Basically, that's where the target is of the traders, and that's what I think is going on right now, or that's what the analysis on this data is telling me. Okay, let's go on, and let's go to derivatives. And derivatives, we can see here, this is the funding rate. So the funding rate is basically whenever it is above positive, it means that the shorters will be paying the longers, and when it's negative, oh no, it's opposite, sorry. So when it's positive, longers will be paying shorters, and when it's negative, shorters will be paying longers. So as you can see, the rates have been very, very negative, meaning there were more shorters on the market. And actually at one point here, that was on the 24th of April, 2 days ago, that was the very, very first time in a very long time, as you can see, since our major crash, that longers were paying, that we had more longers than shorters. But right now, once again, we are dropping down, meaning there is more people shorting this market rather than longing this market. So this site also has an open interest chart, and you can see here, like I keep saying, since that crazy drop in March and the price went up, we can see that the open interest has steadily been slowing down from left to right. So once again, that is one of the reasons that is telling me that this this rise is most likely not something that is very, very powerful, although you never know, right? So people could be just waiting for the moment to pounce, right? So do I have to say anything else on this one? Oh yeah, the mining, yes. So the mining, of course, mining has a lot of effect on the market. Let's go over the mining. This is the mining difficulty. As you can see, since we had that drop. We also had a big drop in the mining difficulty, but since then the market has recovered. That also means that the mining difficulty increased once again, and we are actually back at a very high mining difficulty. That means that although the price is okay, you have to understand we are very near the halving, and it's very hard for miners right now to be mining bitcoins because of the difficulty. So that's something just to keep in mind. And also, usually what happens is whenever we have a very big downturn, as you can see, in the mining difficulty, price also, you know, drop down, and vice versa. So it's just something we should be keeping in mind. Then let's take a look at the hash rate. That's the amount of mining that is ongoing. And as you can see, our hash rate took a very big dump here after that major crash. A lot of miners were giving up and capitulating, but right now we are actually back basically on our median, and we are doing quite high in our hash rate once again, meaning that the miners are basically back mining as per usual. Miners revenue, if you're interested in mining revenue, as you can see here, miners revenues has been going down very hardcore. The reason is, of course, difficulty is going up, and of course more and more competition with the mining equipment and the location, the electricity, and so on. So that is a lot of information already that you can find. Where you can find this information, well, I told you at the beginning of the stream, you can find this all on Glassnode Studio. So you just Google it, and I think you can find it. You can get a free account. It's 100% free, except if you want to have the advanced real-time data, then you have to pay. Hi Andres Garcia, welcome to the channel, and thank you for following. So the biggest thing that we wanted to talk to you I wanted to talk to you guys today is, of course, the Bitcoin hash ribbons. So you can change this into a hash ribbon. Wait, maybe you were used to seeing this. This is the hash ribbon, like this. And as you can see, it was squeezing down red, and then it turned green, and it turned into a buy signal. I'll just move this back into an oscillator, because for me it is easier to be seeing it in an oscillator version. So again, let's wait a bit. Okay, why is it not changing anymore into my oscillator? Maybe I have to refresh it. I'll reload the chart. Okay, now it's perfect. So as you can see, yesterday I've told you guys about the hash ribbons already, and the hash ribbons have never been wrong so far. So it's a very powerful, once again, on-chain indicator, because it's basically calculating the hash rate versus the price and the mining difficulty. So whenever we get a tick up, or the blue tick, or the buy signal, it has been 100% that, you know, we got a good price push. Let's take a look here. So we had here the buy signal on the 27th of December. Let's take a look. On the 27th of December, the price was right here. It was at $7,000, and the price went up to $10,500. Let's go back in time, where we got another buy signal here. Right here, we got a buy signal right here. Buy signal right here. It was on the 11th of January 2019. 11th of January 2019. So let's take a look. 11th of January 2019. It was right here. That was the price of $3,570. And of course, we all know about this move. It went up all the way to 13,880, right? So that's a very good signal as well. So let's go back in time when we see another buy signal of this indicator. right here. Right here we had the buy signal on the 30th of August 2016. 30th of August 2016. So let's see what the price was then. Of course, it was very, very low. And here, yeah. So the price was, what was it again? 30th of August. Yeah, 30th of August. 30th of August. The price was here. $568, and then it went up. Yeah, it went all the way up to $20,000. That was the major signal. If you I want to get rich signal. So if you got that signal, if you were listening to this channel, and we turn back to 2016. If you have a time machine, you go back to 2016. You know this information. You see the hash ribbons say buy, then you know it. You click buy, and you would be rich by now. You would be dumping it at 2000 and 2018, and you would be happy. Anyways, let's go back one more time, a little bit further down. Maybe we see another buy signal. Yes, we do. We see another buy signal right here on the 15th of June in 2015. 15th of June 2015. So let's take a look. Price was here, right here. Price was $230, and then we went up just a little bit only to 318, but it was an okay move. And we have another here buy at the 2nd of May 2015. 2nd of May, the price was, what was it, 229, and actually here it went down more first, but then obviously it went up to 317. So it was one example where it short term it went down, but then it's eventually got up eventually as well. And then we have one more here, 28th of January 2015. 28th of January, and then price was here. Price was 226. Also, it went down a little bit, but eventually it went to $300 as well. So yeah, still a valid buy signal. Let's see if we have more. Do we have more? Oh, yes, we do. We have here in 4th of February 2013. 4th of February 2013. Let's see what the price was. 4th of February. Wow, that was a nice run as well. 4th of February. 4th of February. 4th of February. Boom, boom. Here. So price was $20, and it went all the way up to $260. So yeah, that's pretty good as well. So let's go back to our where we are at. So guys, if you've seen this buy signal right now, you must be thinking, oh shit, I have to buy Bitcoin right now. Well, hold your horses just yet, right? Just hold your horse just yet. This is obviously an amazing indicator, right? So I put a lot of value into it because it has not been incorrect ever since, right? But similar to every indicator, you have to understand that this buy signal, when it can easily go blue and then tick back down by tomorrow. And let's look on the 3-day chart, which is here. And as you can see on the 3-day chart, we do not have a buy signal just yet. So that is the reason why I said hold your horses, because if this is the 2-day, the 2-day also has printed a buy signal. So if we keep having blue candles, then for me that would be a buy signal. But if in the next couple of days we get like a major push down or a crash, then this will turn red once again, and the buy signal will disappear because it will be like it was never there, like a ghost. So what I am saying is, it looks really good. It looks very positive, but I would be very careful at this point of time. But we definitely will keep this in mind. And if this confirms on a week or something like that, yeah, then it's most likely go time. The name of this indicator is called hash ribbons. So you can just add that in your team viewer. It's called hash ribbons. So let's go on and move on more towards more on-chain analysis, because that one is very interesting, of course. So what interests me is this. We've always had, this is basically the Bitcoin difficulty chart. Thank you, Stephen. Yes, hash ribbons. This is the Bitcoin mining difficulty chart. And as you can see, mining difficulty has been increasing steadily since when we had our dump, we still had a nice push up in terms of difficulty. And the reason why is, of course, miners are mining because they are very, very, very bullish about the halving situation, right? So they want to mine as much as possible Bitcoin right now, because they are positive that after the mining that we will get a positive price. So if they mine more, they will have more Bitcoin, and they can sell it later on at a higher price. So what you can do on the mining difficulty, because I've seen that there is a lot of price correlation between the mining difficulty and the price itself, because it's normal. The supply is done by the miners, right? So miners cost the transaction fee, and get the transaction fee in Bitcoin. And what do? They sell their Bitcoin to pay for their bills, their electricity bills, and their computer and their equipment, right? So that's basically how the mining economy works. But sometimes if the price is high, they only sell they sell a little bit, because that already covers their electricity, and the rest of their Bitcoin, they are saving it in a little wallet for a rainy day, let's put it like that, for when price is really low, to be able to still mine, but still pay the bills with their stash of old Bitcoin, right? So whenever the difficulty rate adjusts, we can also see that the supply or the price changes quite substantially as well. That's why I'm doing on-chain analysis on the difficulty for this video right now. So maybe a lot of people don't know how to do this, but you can actually use the traditional analytics tools like the Bollinger Bands on not only on the price, but also on the metrics. So this actually here, this chart here, this is the Bollinger Band, but on the on-chain metrics. So on the mining difficulty. So this is not the Bollinger Band on the price action, but it's the Bollinger Bands on the on-chain metrics or the mining difficulty. So what we can see is the following. So if we take this, we can see that when this is the first standard deviation, by the way, on the Bollinger Bands, and whenever we go out of the first standard deviation, so out of this blue zone, it means that we are reaching some sort of like a top, right? And whenever we are going very far down from this first standard deviation, we are basically forming some sort of a bottom. And when we are just hovering inside this range, it basically means that price is quite neutral, right? So let's look at our price chart and compare. So here we have our top here. We were very far away from the first standard deviation on the Bollinger Band, and we can clearly see here price was topping out. Let's go here. As we can see here, we were outside of the first standard deviation for quite some time, and we can see here very far away from the first standard deviation, and we can also see that price was very toppy here as well. And the opposite way, we can see here when we were down here below the first standard deviation, we can see that this one is a local bottom, as you can see, local bottom, and then we went up a little bit, and then we went further down here, and once again we have a nice local bottom here, and then we went back up here, and then as you can see here, this was our major crash, and we formed a very far local bottom here and here as well. And we can go on in time. So the Bollinger Bands on the mining difficulty is showing me quite a nice correlation with the price, right? So where are we at right now? So we had that major crash and we went back up, and now we are here in this, basically this, what I call a neutral zone right here. And this is on the weekly chart. So let's go on to the monthly. So the monthly is pretty much the same situation as you can see here. Every time we are touching or outside of that, we are seeing some toppy signs. Let's go to our daily. Right now, daily on this Bollinger part, as you can see, we are very far away from our first standard deviation over the top. So that's also one of the reasons that I believe that we are very toppy or near the top, because we are heading very far away from the first standard deviation on the Bollinger Band. Okay, let's do some more analytics on the mining difficulty adjustment. So let's go back to our weekly chart. So on the bottom here, this is my CCI. So the CCI is quite a very interesting indicator as well that I'm using a lot to see reversal or tops. So once the chart loads, because it takes a lot of data apparently to be loading the mining difficulty, and then all these math calculations. Yeah, here. So every time we are basically yellow, it means, or the CCI is below the yellow line, below the EMA. This is on the EMA. As you know, I am a big fan of EMAs, so I do a lot of things on the EMA. And every time we are below the EMA, this is bearish, and whenever we are above the EMA, we are bullish, of course. And let's take a look at our chart at a price. As you can see here, we made a crossover here, right at this point here, and then we were bullish. As you can see, it went here and it topped out here, which is our top here, and then it started to slow down, and then it made this bearish cross here. And as you can see here, we were at some local bottom, but it was not our bottom, even though we went further down. And although we made, of course, price oscillates, and it doesn't mean that it can't go up anymore, but it went up, and you can see here it still goes down, and we bottomed here, and then we can see here it went back up again, and then price went back up again, and then of course we are very far away here. And if you can see very clearly, this slope right now is not positive. That doesn't mean that it can't move up, right? But it is not positive. Although price has been going up, the slope and the red line is still quite far away from the EMA. So that, once again, for me, is telling me that this push up is most likely going to be rejected or is very weak at the moment. So let's go on the monthly chart to see the CCI on the mining difficulty. Yes, it takes a time. Maybe I need to change my computer. Oh, okay. It's there. And as you can see here on the monthly chart, we are still crossing with our slope down as well on the monthly chart. So once again, that doesn't mean that we cannot cross back up, but yeah, we are in a very crucial zone. Let's look on the daily what that says. Oh, here. So on the daily, we can see that we are positive. So this shows really well how we basically went back up, right? So we had this nice bottoming here, and it turned very bullish here, and then we went up here, and now we can see that it's starting to slope back down once again. So that means that if this goes under the EMA, most likely price is going to be, not very good. And yeah, once again, this is one of the reasons why I'm still not bullish just yet, right? So I've been telling that for a long time already, that I'm still not on the medium. Before people are saying like, yeah, he's not bullish on Bitcoin. I'm very bullish on Bitcoin. I'm just saying medium. On the medium, I don't think we are just done yet with our drop. It doesn't mean that we're going to have a lower low. I'm saying that we are most likely going to be retesting, I would say at least like the 5K area or something like that. And we will be re-evaluating after if that happens. So that concludes my on-chain analysis for today. That's a lot of on-chain analysis already. So let's move back into technical analysis like we usually do. So yesterday I've told you guys, okay, this is this is still my week of theory. It's still valid, as you can see. It's the week of theory. Hi Robbe van Hekke. Thank you for following and welcome to the channel. I assume that you are Dutch or Belgian. Hi Faisal, thank you for following and welcome to the channel. So yeah, the week of theory, I still think this is a distribution pattern. Like I said, this is going to move sideways a little bit and then at one point drop back into the previous support levels and most likely head downwards and back into the medium and median. As you can see here, it's somewhere around here that I am expecting, and then I will be re-evaluating things. But okay, let's go back to yesterday. So yesterday, I've spoken to you guys about this bearish drop, that the bearish cross that death cross that I've been talking about for quite some time now already. The EMA 55 versus the EMA 200, and I told you guys one of the things that we have to be taking out and taking notice was, is the 2-day candle going to be closing above or get rejected once again from the EMA 55? And as you can see, yesterday we got rejected once again from the EMA 55. So yeah, that is not a positive thing as well. But right now, as you can see, we are still pushing up. Do we get a retest of this EMA 200? That would be something different, right? Thank you for subscribing, Martin, and welcome to the channel. That would be something different. But on the macro perspective, like I said, those are the things that I was looking forward for. Do we close the 2-day candle below or above the EMA 55? Because that would be a change of behavior. And then the second thing that I told you guys was, do we close the daily above or below the EMA 100, right? So this blue line here. Let me see. And as you can see, we barely we really barely closed above it. So that's a positive thing on a daily basis. And then what happens as today, currently this candle right now that we are forming on the daily is looking, it's looking pretty good, pretty solid. But once again, if you look at the volume, it's just every time I see these pumps, I always look at the volume and it's like, wow, every time we get a pump, the volume seems to be going down. it's like it's so crazy, right? So yeah, once again, are we going to be retesting this green box? Maybe maybe one more spike here, but I still believe that will be it. I as long as I don't see confirmations on a long-term perspective, my perspective is still medium bearish. Then let's look at the, this is the 1 hour. Let's go a closer look at the 4-hour chart. So the 4-hour chart looks like this, and I told you guys, this is a very annoying thing, this sideways movement. We can look at this as like maybe it's a little bit far reached, but this is sort of like a triangle sort of pattern. So if we take a measured move, we could get a push up to around, once again around our green box once again, if this pushes through. But like I said, I'm not really interested in these kind of small moves, and if I don't trade during the weekend for that reason. And as you can see here, this this candle was so amazing, wasn't it? Like, look at this formation. So it pushed up and it pushed back down in like 1 minute or something like that. That's just a shakeout of the bots, to shake out the people who are over leveraged, of course. But as you can see, this right now we are not in a, this is not the move that we are talking about for a while now. So let's go on to more interesting things, and that is the historical volatility percentile. And as I've told you guys, this is really getting near an apex right now. As you can see, HVP is getting super low. We are only at 6 right now, 6. And as you can see, if the apex would be the 11th of May, but usually when this type of pattern starts to be created, it doesn't reach the apex, usually 70 to 75%, and then we get a major breakout. And as you can see, it has been contracting since the 13th of March from the top here. So it's that whole pattern that we are looking at since the 13th of March. So this whole pattern from the 13th of March, since this whole rising wedge is going to get concluded once we hit this apex, basically. So yeah, this is going to cause, I think, yeah, it's such a long contraction. So I'm thinking we will have a $2,000 or maybe even a $3,000 move. It's going to be insane. But this indicator doesn't show any direction, so it can be going up, it can be going down. It just shows that we will have a huge move in price action. And like, if you can see it, it's already on very low numbers. So yeah, before the end of the month, and we only have 3 days left, I guess, right? So action will be maybe tomorrow, maybe Monday, when CME is going to be opening. Tomorrow morning, I'll definitely be waking up at when CME pre-market opens at 6 a.m. because this is what, in a trader's perspective, this is money time, So yeah, we're very near there, and I definitely don't want to be missing out on these huge moves in volatility. So yeah, tomorrow morning it will be two super important things that we will be looking at. Of course, it's going to be the weekly close at, well, for me it's 8 a.m. At 8 a.m. CME pre-market starts at 6 a.m. so I'll be up by then, and the weekly close is going to tell us a lot of things, and then it will basically a domino effect towards the monthly close. And yeah, the monthly close is what I have told you guys already. If this monthly close is above the yellow EMA 21, I will turn bullish, because that will also confirm the hash ribbons. That will also confirm the bullish trend, and then yeah, most likely we will be going upwards. Hi David Sharon, thank you for subscribing and welcome to the channel. So yeah, if the monthly so tomorrow there's two things, right? So we have a huge move, most likely before the monthly close. So that will basically determine everything. Do we close above the monthly close, above the EMA 21, then most likely we will get the bullish continuation. I will turn into a bull, medium term, not long term. I mean, long term I am already bullish, but medium term I will be turning into a bull. That's how it is. No emotions, just trading purely on the charts. And the weekly close, let's look at the weekly close. What am I looking tomorrow is very similar, right? We have all this resistance here. You can see it here. The EMA 21, the EMA 55, the MA 21. If we close above the EMA 55, then and above the EMA 21, actually above the EMA 55 is probably where I would be looking at for the weekly close. because if it's above the EMA 21, then it will start curling up. So yeah, it would not give me the pure confirmation just yet. But you can see this is a rising wedge pattern. Rising wedge patterns usually often break down. And that is already what we have seen on the traditional markets as well, right? So we have this rising pattern, and what happened to the S&P? It broke down. Will Bitcoin do exactly the same thing as the S&P? That is the question, right? Will it break down as well? Then let's do a quick S&P check, right? So we've been checking the S&P, and what do I see here is that the stocks are making a bearish cross. As you can see here, the blue line versus the purple line, and that is showing red, as you can see here on my chart. So that, once again, it is showing me to short the stock market. That's basically what this is saying. So the question is Bitcoin going to be following the stock market, yes or no? Because I do believe that the stock market is going to have a pullback starting next week. And if Bitcoin is correlated to the stock market, it will go down as well. All right. So let's take a look on the one more thing that I wanted to show you guys is the RSI. Whoop, whoop. Let's go here. So that's not the daily, that's the 12-hour, sorry. This is the daily. So this is the daily. And as you can see, we have formed a support line here. This red line is support, bounce off support, broke down support, pushed back up, hit resistance once again, hit resistance once again. And this one, as you can see, there's still some space. But if we get there and we get a massive rejection down, then we would have our big move downwards. If we manage to break this resistance here, this line here, then of course we have space to go back up, similar like here. So yeah, like I said, two things that can happen. That's what the HVP is telling me. Also, this is the stock resistance line. As you can see, we are still trending up on a daily basis. We still have some space here, but if it starts curling down, then we have a problem. Let's take a look at the 12-hour chart, because the stocks on the 12-hour chart have been really magical if you have been trading the stocks on the 12-hour chart. This line has been giving me a lot of tops, perfect tops and bottoms. So as you can see here, we are once again very near that that resistance line again. And actually what we should be doing is actually something like this more right now. Let's put this in dashed lines. Yeah, so we are here. If we get rejected here, then most likely, you know, price will just dump down from here. If we break this this line, we still have space here, but if we get rejected there, same situation, right? So that's basically what the question is. I think, do we get another leg up before we dump down, or we just start our dump from here? You know, it's basically, that's what I'm thinking on a technical perspective. But that can change by tomorrow. That can change in 4 days when the monthly candle closes. But yeah, this next week is going to be a very crucial week for Bitcoin in a macro perspective, because if the monthly closes below the EMA 21, we will have a downtrend for definitely for a couple more months, maybe 1 month, maybe I'm exaggerating, maybe 2 months, but yeah, a couple of more months usually, right? Very same thing on the stock market, exactly the same thing. Yellow line, EMA 21. Do we close in 4 days? Do we close above the EMA 21? I would be bullish on the stock market. It's the same as in Bitcoin, right? That's why there's so much correlation between Bitcoin and the stock market, because we are looking at exactly the same situation. Do we close the monthly candle above EMA 21 or not. So yeah, that's of course, Jared, that's my own perspective. So you of course you have your own opinion, but that's my own opinion. I do believe that we will have a big move very, very soon, next week before the end of the month. So let's take a quick look at the expected moves chart. So first standard deviation on the upside is $7,779, which is nothing different. It would be just the green box that we are swiping once again. If we are looking at the bottom of this first standard deviation, it's 7,550. Once again, it would not change the macro trend as well. The only thing that we can see is that the lines are converging and moving together. That means they are contracting. And whenever they are contracting, it also means that we will have a big move because it's pressure on both sides. So basically, that is what the expected moves chart is telling us, not that much information. So let's go again to our short-term chart. So yeah, this looks positive. Do we swipe one more time this green box area? Maybe. If we close above the EMA 200 by tomorrow, that would make me bullish as well. So above 7,879, that would turn me bullish as well. If we can clear some of this resistance. But until then, I am still medium bearish on Bitcoin. And yeah, I am looking forward for tomorrow. What is going to happen? How the weekly candle close is going to be closing, and what the next couple of days will happen before the monthly close. But yeah, I think that is it. It's going to be very exciting for me. Well, at least I think it's very exciting. What will happen tomorrow morning when CME chart? Oh yeah, maybe take a quick look at the CME chart. CME chart is, yeah, like I said, rising wedge. It actually closed the day quite well as well. See, as you can see, it closed above the EMA 55, but still below the EMA 100. So yeah, nothing clear as well on the CME chart. But once it starts trading again, I think, yeah, let's see tomorrow what will happen. So for now, I still am not bullish just yet. I hope I can be bullish. For me, I prefer to be in a bull market than in a bear market for sure. But yeah, I can only say that for me, this looks very weak. This push with the price keep going up, but the volume keep going down. Yeah, on a technical perspective, that is what I'm thinking. We most likely are going to have a major pullback over the next couple of weeks, months, maybe like that. Not that bad. A lot of people are already saying like $3,000 and $2,000 or something like that. I don't think it's going to be that bad just yet. Maybe, could be, but we'll be analyzing things when we get that far. But I do think that we most likely will get a pullback. That's what I am expecting. But things can change. And if they do change, if we close the monthly candle above, I'll be turning bullish. It's as simple as that. So yeah, hope you enjoyed the show. There was a lot of technical stuff and a lot of on-chain stuff. So I hope to see you guys tomorrow, 7:30 p.m. UTC +8 on Facebook Live or on YouTube Live. And until then, of course, stay home, stay safe, and of course, stay COVID free.